Hello friends, this is your host Rakesh Kumar with yet another video on the examples about the pennants, because in the previous video we had discussed about the pennants formation. Just to remind you that if you have not subscribed to our channel yet, then you can subscribe to it now to get the notifications of the latest video uploads. And if you find this video useful for you, then please consider pressing the like button which is below the video. Before we start, I just want to tell you that the pennants are the continuation formations and they form in the uptrend and the downtrend as well, and we have discussed them in the previous video. In this video we are only going to see a few examples from the live market.
But before we begin, let us have a look at the risk disclaimer. It states that the futures, stocks and the options trading involve substantial amount of risk. Your capital is at risk, the losses can exceed the investment. The information is provided as is, and the user of the information assumes the entire risk of any use it may make or permit to be made. So let's get started.
Okay friends, the first example that we are going to see is of the EURUSD daily chart. From here you can see, I'll go in step by step, because if I will already keep this on the chart, then you will be able to easily see where it is, but it is difficult to identify when it is not there. Okay, you see that there was an uptrend here. There was a quick uptrend here after this sideways move or a move nowhere. There was a small uptrending move, and then the price started consolidating with while it was trying to make this top high, and after that this lower high. And on the other hand, the price was also making higher lows. One is this one is this one, and after this it started making higher lows. So if you reject this one here, then you will see that the price is actually making a good triangle. We call this as a pennant. Doesn't it look like in the form of a flag which is there on the ships? So this is from where the word comes, pennant. Okay, so it is looking like a flag, yes, and this one is looking like a pole. So now this is your pole. So the essential ingredients that we had discussed in the formation of a pennant was, first was a quick up move, then some consolidation, or after this pole we needed a pennant or a flag. This is a small flag which is also called a pennant, and the price should break in the direction of the trend. We see that the trend was up, so this break was in the direction of the trend, and then there was a small retest. Then how to trade this? Open a buy position here and keep your stop loss here somewhere below this previous low. And what will be your take profit target? Your take profit target will be equal to the height of the pole, which in this case is this, but it should be measured from the break. But the problem is that in this case the pair has not taken its target. The pair could not go above 1.5153. you see. So this was a failed trade. Your stop loss would have been hit in this case if you would have not moved your stop loss in the buy zone. Okay, more on that in the risk management. I will explain you in the later videos. But yes, but this is a pennant, but the pennants are bound to fail also. Okay, the second example that I have for you is, it is also a quick example on the Australian dollar against the Japanese yen. You see that the price was moving sideways, and then suddenly from here, after it made this low here, it started moving in the upward direction and made a small high here. Okay, after it made a high here, the price started moving sideways, and by the sideways we mean it started making nothing but a congestion. So it made a low here and another low somewhat here. So you see how clearly it became a pennant. From this low to this high, this was the pole, and this became the pennant here. So does it look like a pennant to you now? And more interesting part of this thing is that you have to have a very small span of this pennant. If the pennant is too long, then it is not worth trading it. Okay, so here you see this pole height. This height of the pole is actually the target once it breaks, and in this case it easily achieves the target and also moves too much in the direction of our trade, but we have not to be greedy. Now okay, the pole is there, the triangle is there, the breakout is there. You also notice that the retest of this line never occurred after the break. Of course the price came down to this line, but it never touched it. So there cannot, if the trend is very sharp, of the up move is very sharp, then there is a possibility that the price will never retrace back to this level, but your stop loss will be below this and your take profit will be equal to the height of the pole. So this one I have covered. Now I want you to see if you can identify any of from the USD CAD maybe. Okay, let us see if we can collectively find one example from the US dollar versus the Canadian dollar. The essentials are that there should be a sharp move down and then there should be a triangle, or there should be an up move and then there should be a pennant before continuation of the trend, of course. There is flag, which we have discussed about in the previous videos. Okay, not in the US dollar against the Canadian dollar. Let's see if we can get it in the Australian dollar against Canadian dollar. Okay, here it is. Here it is. If you see, here it is. This here is a sharp move, and then we have our triangle. Not a triangle, but yes, a small consolidation in the form of a triangle, you can say. Okay, and this was an up move here from here, or you can also take it from here. Okay, now this move here is the major target. We'll clone it and then we'll move it upwards from the point of break. So this will be our target. So you see how it happened. The price started in the upward direction, then it consolidated somewhat, and then it finally broke out. After breaking out, it will definitely move in the direction of the trend for a long time. Well, in the last two examples, in the Euro US dollar against this one, it did not fulfill the target, but most of the time it takes its target. That's why it is a very robust pattern to trade, and it should have occurred for a very small period of time. Say if the pattern is somewhat like this, which is very, very long, then it is not worth trading. Okay, the smaller the pennant, the more robust it becomes, or the more explosive is the move after it breaks. So that is it. So friends, what I have a few things that I wanted to tell you, that if you are really going to take trades in the real markets, first off I will say that you take the paper trades only, just to be more confident about the pattern trading. But if you are really going into these markets and going to trade, then please bear in this mind that if you click, the trade will open, but it will be difficult for you to manage them if you don't know the proper risk management techniques. And I would request you that you do not put more than 1% of your capital on any single trade. If you are going to open a position, please check your position size, that if your stop loss gets hit, it should not make a loss of more than 1% on your account. And better if you plan your trade beforehand and see what are the probabilities. If there is a possible risk to reward ratio of 1:3, then only you should be entering that trade. Otherwise there is no need to enter the trades. the market will offer much more opportunities to you in the future if your account is safe to trade afterwards. With that note, I'll end this video now, and we'll see you in the next video with another chart pattern. Thank you very much for watching this video.